welcome in Noah Hamman, CEO of Advisor Shares, taking a look at overall your portfolio. But you said you want to consider investing in the picks and shovels of the AI trade in the industry. How do you feel about the market at this moment? Are you feeling positive?
I am feeling positive. I think there's a few headwinds ahead of us. Inflation seems to be creeping higher. Unemployment a little bit higher as well. We'll see what the Fed does with interest rates. So I think there's a few things that make it challenging for the consumer, which if it makes it challenging for the consumer, it's going to make it probably challenging for the market.
But at the same time, are you still a fan of the AI revolution? Because I know some of the picks you have are sort of correlated to that.
I am. I mean, it was interesting to hear you interview your last guest, Dan Ives, and talk about how much he loves Nvidia and the AI trade. And I'm with him. It's fantastic. It's going to continue to grow. I think the challenge with something like Nvidia is what we saw with earnings, this past earnings announcement, right? The very next day, the stock price went down a little bit. And while I'm confident they have plenty of sales ahead, they have seemingly ahead of the competition, even Google with their announcement relative to their chips. What's not certain is that they're going to trade at the same multiples they did. And so when you saw that stock pull back after a beat, you understood that there's some weakness there. And so if you've been an investor in that position for a while this year, and you're thinking about trying to manage your risk, absolutely. We talk about investing kind of in what we call the picks and shovels of that industry, and not just that industry, data centers and crypto. So we're looking at the heating and cooling industry, which typically might be a little bit boring, but has done really, really well and is really the picks and shovels of that underlying AI economy.
Yeah, you like the HVAC ETF, and in there is Comfort Systems, Amphenol, and some of these names. I mean, Comfort Systems up over 120%, 100% for Amphenol. These are some names you like. Do you continue to like the HVAC ETF and some of these names?
I do. It's managed by one of your favorite portfolio managers, Dan Aarons, over here at Advisor Shares. And so absolutely, those are two of his top picks in that portfolio. As a group, the HVAC ETF is up a little bit over 25% this year. Now, that's less than the chip sector. If you look at SMH, I think it's the Van Eck Semiconductor ETF, that's up over 40%. But beating data servers as a group, beating, of course, crypto. Bitcoin's had a bit of a rough year after a strong start. So to get 26%, especially relative to the market, this is probably one of those areas where it feels a little value, a little old school blue chip. These are tried and true industries that are really driving the growth of what we're seeing with companies like Nvidia. So that's how we talk to advisors about it, is if you're getting nervous, if your clients are getting nervous a little bit about that, nothing wrong with taking some of those gains off the table this year and maybe looking at HVAC or the picks and shovels of that industry.
And then we turn to crypto. I mean, Bitcoin itself has been down about 20% this month. It's trying to claw back a bit now. I saw it at 90,000. You watch the IBIT ETF really closely. Tell me, is there opportunity there? Do you think the sell-off is an opportunity?
I do. Someone I watch a lot is someone named Mark Yusko from Morgan Creek Capital. And one of the things he talks about a lot is the history of the price action of something like Amazon and how it had, anywhere from 70 to 80, I think even at one point, 90% drawdowns, I think 3 different times over the cycle of that stock and of that company. And he always talks about, who's held it through all of that volatility. It's Jeff Bezos and, probably his family. And so when you have something that the fundamental story fits, it's technology that people seemingly are adopting, it's seemingly going to be a tool of the future. I'm not sure that I see it as a currency play per se. I think that if you are a Bitcoin fan and you believe in that story, I do think that you stick with it and you get these opportunities to buy in at these lower prices.
And then when I think about overall, I mean, you also have semiconductors and data servers ETFs. Do you like both of those too, or are you just watching those?
I watch them more as we look at how the HVAC industry is doing, right? Those are the areas that are growing like crazy that the HVAC industry does support, but those have been weaker, right? The server data ETF, and I forget who runs that ETF, but the ticker symbol is SRVR. It's down, I think, 3% this year. So it's really been AI that's driving the returns. HVAC has been nice. And then you look at the commodities, because it's interesting, something like gas, which it matters to people, especially if you're driving to see your family this weekend for Thanksgiving, is down. But conversely, electricity's up, I think, almost a little over 4% this year. So, people are paying more for that. And that, I think, is, again, one of those things that are driving the HVAC industry. And I would point out a company that you just mentioned that is one of our top holdings, like Amphenol, and the ticker there is APH. They are the technology that connects those things, the hardware and the sensors, to allow you to run those things more efficiently. So when you are seeing energy prices, or electricity in particular, going higher, that's where that company has really benefited by finding efficiencies really more at an industrial level, more than you might see in your home. And that's what really has driven strong returns for that company, which is up almost 100% this year as well.
You said you want to keep everybody's investments hot, even when, people are worried about the cold weather and all that. Do you see new highs? I mean, overall, do you see S&P 7,000? If so, when would that be?
I do, and I would be far pressed to give you a specific guess around that. But hearing what you interviewed with Dan Ives and him talking about, at some point interest rates will probably lower. If it's not December, with a new Fed chair going into next year, you've got administration that is very focused. Their scoreboard, I believe, is in part the stock market. And so many people's investments, whether it's they're investing for their own in the market, or it's their 401ks, are driven by it. I think you're going to see an administration that is going to drive things as aggressively as they can, whether that's all the investments that we are seeing being announced within the U.S., hopefully a lot of job creation around that, probably a lower cost of capital. It'll be a bumpy ride, but I would say that we are probably going to continue to head that direction. And the only reason why I probably wouldn't guess when we're going to hit it is because it definitely will not be a straight line. It's just a function of how investors are allocated and what they're willing to stomach from a risk perspective.
We've had gasoline here this Thanksgiving holiday now is at the lowest price in years. So that's good news for folks. But you talked about other things like food, housing, electricity, taxes, some of the things that folks pay. Why are you bringing those to our attention? Why does that matter? I mean, we all have to pay all of those things. Is there a way an investor can use this and tell us some news?
Yeah, I focus on those data points just because I believe there is a bit of an undercurrent in the economy, just for whatever average, U.S. households, that food prices do matter, right? When you look at the overall inflation number, it's come down with this new administration and doesn't feel that bad. But when you look at specifically where higher rates of inflation are, education is higher, housing is higher, food is higher. And so those are the things that hit everyday Americans. So, maybe with a lower cost of capital, maybe hopefully with lower interest rates on their home debt and home mortgages and on their credit cards, those things can help. But also a strong economy, if this administration can deliver on that, I think it creates, more opportunity in the marketplace, even though consumers still seemingly have a lot of pricing challenge and a lot of affordability challenge ahead.
Noah Hamman, CEO, Advisor Shares. Great to see you, Noah. Thank you so much.